Normally, when we look at a healthy trading day for a standard stock, we expect to see somewhere between 30 to 50% of trading happening off exchange, which is standard for institutional block trades. However, yesterday, AMC hit a staggering 81.01% off exchange volume, which is a statistical anomaly that screams that something is happening behind the curtain. To put this into perspective, out of approximately 54 million shares traded on the day, a massive 44 million shares were routed through dark pools and wholesalers, completely bypassing the lit exchanges where price discovery actually happens. The reality of the situation is that only 7% of trades actually hit the New York Stock Exchange, meaning the vast majority of retail buying pressure is likely being intercepted and absorbed internally by market makers, rather than being allowed to impact the visible stock price. This looks like classic price suppression, where the visible price of $1.39 may not reflect the true demand for the stock, because the buying orders are being diverted into dark venues where they have little to no impact on the ticker. The spring is being coiled tighter and tighter as they attempt to hold this beach ball underwater, and when you see over 80% of volume vanishing into the dark, it suggests that the market makers are working overtime to prevent a breakout that would occur if that volume hit the lit market. While the dark pool data shows us the manipulation, the technical analysis on the chart is painting a picture of a potential bear trap that could snap back violently if we play this correctly. The technical indicators are currently screaming that the stock is oversold and we are setting up for a potential reversal, but everything hinges on our ability to hold the line at these critical levels. The most important number on the board right now is $1.35, which is the 52-week low and currently acting as our critical floor. The stock is compressing right against this level, and this is the line in the sand that the apes must defend. Because if we hold here, it forms a massive double-bottom technical pattern, which is historically a very strong bullish signal. On the upside, we are looking at a ceiling around $1.40, where the volume-weighted average price, or VWAP, is sitting. This level acted as a hard cap on the price yesterday, and it is the first wall we need to break through to change the momentum. The signal we are waiting for is a lit exchange breakout above $1.41, because if the price can break that level with genuine volume on the public exchanges, it forces market makers to de-hedge their short positions, which could trigger a rapid move higher. If we clear that resistance, the path opens up quickly to $1.45 and then to the psychological barrier of $1.50. The Relative Strength Index, or RSI, is currently sitting at 37, which confirms that we are in cheap territory and statistically due for a bounce. This setup has all the hallmarks of a bear trap, where they try to induce panic selling at the lows before ripping the price back up. So watching these key levels of $1.35 support and $1.41 resistance is absolutely critical for the next session. Amidst this intense battle on the charts and the dark pool data, we have just received a fundamental catalyst that gives the bullish thesis a brand new weapon to fight with. While the technicals are fighting a war in the trenches, the fundamental outlook just got a significant boost because AMC has officially teased the release of the Scream 7 Ghostface popcorn bucket, which is set to launch on February 26th. You might be wondering why a popcorn bucket matters so much, but seasoned AMC investors know that viral merchandise is a massive revenue driver for the company. We have seen in the past, with items like the Dune Sandworm buckets, that these collectibles can go viral on social media and generate high-margin revenue that goes straight to the company's bottom line without the high overhead costs associated with other revenue streams. This matters because it provides a tangible reason for excitement and revenue growth that bears cannot simply ignore. The timing of this announcement is strategic because the hype cycle starts right now. In the stock market, smart money buys the rumor and sells the news, which means the accumulation phase begins now in anticipation of the launch later this month. This positive sentiment serves as the perfect counterattack to the bearish technical trend we have been seeing. It shifts the narrative from a stock that is just drifting down to a company that is actively engaging its fan base and generating new revenue streams through smart marketing. This merch drop is not just about popcorn. It is about proving that the brand is strong and that the fan base is willing to spend money, which destroys the short thesis that the company is dying. This fundamental catalyst, combined with the technical setup, creates a divergence where the price is low, but the news is good, which is often the best time to look for an entry. So, how do we turn this information into a winning strategy for the next trading session? The game plan is clear, and we are looking specifically for a green day reversal scenario, but we need to be disciplined in our execution. The zone to watch is tightly defined between $1.40 and $1.41. The trigger for any bullish action is not just price movement, but volume composition. We need to see a volume spike specifically on the New York Stock Exchange or NASDAQ, and not just more churning in the off-exchange dark pools, because lit volume is what sustains a rally. If we see that breakout, our first target is the previous high of $1.45. If momentum carries us through that level, our second target is the major psychological barrier of $1.50, where we can expect some significant resistance. On the defensive side, the strategy is simple, and that is to hold $1.35 at all costs. A break below that level would be technically damaging, so defending this floor is the priority for the bulls. The bottom line is that they tried to bury the buying pressure in the dark pools with that 81% figure, but they cannot hide the fundamental catalyst of the Scream 7 launch indefinitely. The price is compressed, the news is bullish, and the setup is primed for a move. The buy button may feel like it has been turned off due to the dark pool rooting, but the demand is real, and the spring is coiled. We are watching the $1.40 level closely, and if the volume steps in, we could see fireworks. Stay sharp, stay focused on the data, and do not let the manipulation shake you out of your conviction, because the math eventually has to balance out. In my opinion, the current setup for AMC represents a textbook example of a coiled spring created by a disconnect between visible price action and underlying market mechanics. The most significant anomaly is the 81.01% off-exchange volume. Such an extreme concentration of trading in dark pools strongly suggests that retail buying pressure is being absorbed internally rather than allowed to impact the public order book. This mechanical suppression has compressed the price against the critical $1.35 support level, creating a high-stakes do-or-die technical moment. However, the bearish trend is now colliding with a tangible fundamental catalyst in the form of the Scream 7 popcorn bucket release. Historically, these viral merchandise events act as powerful sentiment shifters and revenue drivers that short sellers often underestimate. While the downtrend is undeniable, the convergence of deep oversold technicals, RSI 37, with this fresh marketing hype creates a highly volatile opportunity. If buyers can force volume onto lit exchanges and break the 1.40 VWAP, the removal of that artificial suppression could trigger a violent relief rally, making this a battle between structural containment and fundamental demand.